Hello and welcome to Stockbusters on TFNFinancialNews.com. I'm Andrew McCord. Now, if I told you I had a mid-cap regional bank stock that has risen roughly 72% over the past 5 years, that boasts an 11.27% return on equity, an EPS growth of 9.3% over the next 5 years, and a 2.62% dividend yield to boot, would that be something you'd be interested in? I'm guessing most of you are saying yes, and that's why Alabama National, ticker symbol ALAB, has many investors salivating over their numbers. The company's core business revolves around the servicing of customers in their 87 banking and 8 loan offices throughout the Alabama, Georgia, and Florida regions. The company has consistently increased total assets, net income, and shareholder equity, helping to make it a darling of the street. However, it wouldn't be Stockbusters if my guest today believed that Alabama National was a smart place to have your money. So joining me is Stephen Oakes, Editor-in-Chief of Volume Spike Alert, to tell us why now is the time to sell and make profits on this high flyer. Over the past 10 years, Stephen has mastered the secrets of market timing through the use of technical analysis. His most recent pick, Playtex Products, has soared 21% in just a month, and he's been bullish on Taser since the beginning of June when the stock was $10.50. Today, those shares trade for closer to $16 per share. Stephen, it's an impressive track record to say the least. Thanks for coming on the show with us.
Andrew, thank you for having me.
Hey, let's get straight to it. We've already been over the numbers, and I need some convincing here. How can you be betting against such an onslaught of strong data? To be honest, I can easily see those closer to retirement looking to add this play to their portfolio just for the dividend alone. So why the bearish mood on your part?
Well, I hate to be the bearer of bad news because the Alabama National has done quite well over the year, and the stock price obviously reflects the fundamental data and investor sentiment. But look, the run is over, at least for a year, and institutions are leaping out of their windows just trying to sell out or profit here. I mean, who could blame them? Let's take a look at the stock price. The price has already fallen $12 since its peak in late January. That's a 16% drop. It's just too much downside risk on this one. Look, I'm a technician at heart, and there are a few main indicators out there that I use in evaluating plays, such as moving average convergence, divergence, and the directional movement index indicators. But here's what I see on the charts. Right now, there's a descending triangle pattern on the multi-year monthly charts. Most people in the technical analysis world know this all too common setup. Usually the breakout, or breakdown in this case, takes in the form of a trend prior to consolidation. With Alabama National, you have just that, a downtrending stock temporarily caught in a consolidation period. This pause should get the bulls excited about a rebound just long enough to lure them in and pound them back down to the ground again.
But many out there would say technical analysis is just some crazy market voodoo. Is this just a case of the fundamental crowd butting heads against the technical one?
Yeah, I've heard it all before, and I love to prove them wrong. No system is 100%, and I do place a lot of emphasis on protective stop losses to limit downside risk. But it's painfully obvious here that the momentum is just gone for the time being on Alabama National. But getting back to this one crowd against the other, I believe fundamental analysis does have a role to play, mostly in long-term investing, but it doesn't serve the investor well, specifically when it comes to buy and sell points.
Okay, hold up here for a second. Is there any fundamental data out there then right now that would hint to the average Joe that maybe this stock is overvalued?
All right, way to pull me over to the dark side. No, I'd be foolish to stomp around in their territory, but yeah, the company has a negative growth rate, and the picture gets slightly worse next year. I believe the stock was downgraded in late April, so that didn't help much either. But this alone wouldn't be enough to shake investor confidence and derail the stock, especially when you look at all the positives this company has going for it. But the banking industry as a whole has and will continue to be pressured due to the exposure in subprime lending. It's just a deteriorating situation that, in my estimation, will only get worse as defaults grow and eat into profits. Look, the bottom line here is that investors are worried about losing their gains, and they'll continue to sell until the stock finds strong support, whether it's at $50 or further down the line near $40. Like I said before, this is not a long-term outlook.
Okay, that's a compelling argument, that's for sure. And I hate to say it, but unfortunately we're out of time. Thanks for joining us, Stephen.
Hey, great to be with you, Andrew.
You can learn more about protecting your nest egg right here on TFNFinancialNews.com or simply click on this screen. Thanks for tuning in to Stockbusters. I'm Andrew McCord. Until next week, keep your portfolio safe.